afternoon, everybody. It is 2 o'clock on the dot, and we'll go ahead and get started. I hope everybody is having a fabulous week. I'm muted. I'm sorry, y'all.
Yep.
Welcome. It is 2 o'clock on the dot, and we'll go ahead and get started. Welcome to Talk to Tameka Tuesday. Auntie Doc, as we affectionately call her, is on the road right now. So she may get a chance to pop in and she may not. However, for those of you who don't know me, I am Ebony Killian. I am a member of the Women Investment Network as well as one of the admins on the page. I want to say thank you for tuning in. Just a little bit of housekeeping rules before we get started. If you all have a question, please put them in the chat. I will do my very best to check the chat as we go along. Make sure you have your pen and paper handy so you can take some great notes. And closer to the end, our special guest will provide her contact information if she chooses to. So be ready to write that down when she does that. Without further ado, let me introduce our amazing guest today. We have Miss Diane Rosenkrantz with Tenet Financial Group, who is going to bring some powerful gems to you today to add to your investment arsenal. Go ahead, Diane.
Excellent. Want to make sure that you hear me clearly.
I can hear you perfectly.
And does everyone see my presentation, the first slide?
I do not see it.
Do you need to hand over?
Let me share screen. Hold on.
Okay, perfect.
Let's see. Let me check. Hold on.
Well, let me end my slideshow from here and then be able to upload it when you are ready. I can also click the share screen at my end if that works.
Try that. There you go.
All right, ideal. Let's see, get this from the beginning. Well, hello, everybody, and thanks so much for your time and the interest in learning about this very, very exciting non-debt option that has been great for so many people that Tameka and I have assisted together. I'm with Tenet Financial Group, and our headquarters is in Texas. Perhaps from my non-Texas accent, I am from New England. And I work with clients such as yourself from all over the country. I've been in Tenet Financial Group for the last 12 years, been in pensions and customer service, and done a lot of training. I've written a number of articles regarding funding and have done a number of presentations quite often. My background, I worked at Mass Mutual, Connecticut General, Cigna, and I'm just very excited to be able to share this option with you and see how I can help make your dreams come true. This option goes by a couple of different names. It's called a rollover as a business startup, and it also is called a self-directed 401k. And this option can be used by anyone that wants to preserve their cash or might not have as much cash on hand, but for people that have pre-tax retirement funds, such as an IRA or 401k, you could actually use them penalty-free without taking a taxable distribution. And this can be for any business venture, any for-profit business you want. Now at the top of the screen, the nickname for a rollover as a business startup has, in my opinion, in the funding realm, a very unique name. The initials for rollover as a business startup are ROBS, but in reality, who would ever call a funding option ROBS? So I want to let you all know we did not create this nickname. No way, shape, or form, but it is a name that some people are aware of. in addition to the IRA rollover, the 401k rollover. Let's get into a couple of more details. This particular option is for any type of retirement funds that have never been taxed. Depending on where you worked, what type of company it was, whether you worked the government or the military or the school system, you could have a retirement account that is not called an IRA or a 401k. You might have a 403b, a 457. You might have a thrift savings called a TSP, pension. You might have an annuity. If you were self-employed and you were saving up, you might have a SEP IRA, self-employed plan for a person who is putting away money. The key is that these retirement dollars are absolutely viable if they have never been taxed. So though we call it 401k and IRA, those are just the most common types of pre-tax funds. Now, how are you able to tap into these funds? How can you use them penalty-free and without taking a taxable distribution? And that's where Tenet Financial Group comes in. We are going to help you with each and every step of the process. At the beginning, we need to set up the right type of entity. The IRS requires in this funding option that the setup entity is a C corporation. So we can set your corporation up in any state you live in. We will get your articles of incorporation. We'll get your federal tax ID number. We do the minutes and the bylaws for the C corporation. So there's no need to hire an attorney or go to LegalZoom or your accountant. At the same time that we set up your proper corporation, we're also going to do the minutes and the bylaws. We're going to mail you your corporate binder. We're going to set up a brand new 401k plan for your new business. We're going to set up a 401k profit sharing plan that is directly linked, completely related and tied in to your corporation. Because any for-profit corporation would be allowed to have a 401k plan. So now for your new business venture, you'll have a corporation, it'll have one tax ID number, and you will then have a 401k plan with a different federal tax ID number. Therefore, again, two entities. That's going to be a 401k profit sharing plan. And we're going to go into some of those details shortly. When you have retirement dollars, let's just say it's an old 401k or an old IRA, you are literally able to use any portion of those funds you want. They will specifically leave where they are today. So whether you had an IRA at, let's say, your bank, or you had an IRA at Vanguard, let's say you had a 401k at Mass Mutual or Fidelity, the money that you wish to use for your new business, it will leave your old retirement account and it will be able to be rolled over, whatever amount you want, into the new 401k plan of your corporation. When that money goes into your corporation, it simply can be by a paper check that comes over. It might be an IRA that just rolls into the account. We go over all of those details with you. So now that you've got a 401k plan for your new business, it now has funds in it. Let's just say, for example, that you had a pre-tax account that had $100,000. Those funds would be liquidated from where they are today. They would go into the new 401k. Let's say now your 401k has $100,000 and you say to yourself, well, you know what? I think I need $95,000 for my new business. In this example, You're then going to be able to wire out of the brand new 401k $95,000, moving it into your company bank account. You could set up your company bank account at any bank you wish. The funds in this example, 95,000, is completely liquid. In the arrangement or the monetary example we had, you now have $5,000 that are still in the brand new 401k. Doesn't have to be 5,000. This was just an example, but showing you that you've moved a majority of the money, if you want, in a lump sum into your company bank account. The money in your company bank account is for any and all business expenses, any purchases whatsoever. You have 100% control of the money you wanted moved into the bank account and to use the money in the bank account. And in this example, not only are you the officer of your company, you are probably the president, you could be the secretary treasurer, you're wearing a number of hats. You're also the employee of your business that you are starting. And you are also what's called a trustee of the 401k plan, meaning you and only you are able to control the funds in your 401k account. There is at no time that your funds go to Tenet Financial Group. We are helping with each and every step, but your funds leave the old account, go into the brand new account to fund your business. And then you have control over how you want your funds invested in the new 401k going forward. And with your new business, you are able to take a salary. You are an employee of your company, no different than if you worked at another business. So you're an employee of your very own company. You're participating in the 401k because when you take a paycheck, you are now able to participate and make a deferred salary contribution to the company 401k plan so that you could grow those dollars. And that's great. So that is the flow of the process regarding the rollover option, where you can be using those funds to invest in your new business. So to cover a couple of the key things, make sure we're all on the same page. The rollover option is for any funds you have that have never been taxed. That would be really what simply is referred to as pre-tax retirement accounts. For example, if you have an inherited IRA, maybe a grandparent or someone passed away, you cannot roll over an inherited IRA. If you have a regular, standard, traditional IRA, those are perfect. You've got a 401k, perfect. The funds must be pre-tax. So therefore, a Roth IRA, ROTH, by definition, those funds have already been taxed. That would not make sense. Those cannot be used. You are absolutely able to use more than one retirement account. Let's say you have an IRA that's $20,000 that you've been putting aside. Let's say you've got another IRA with $15,000. Let's say you had a job years ago and you had a 401k and you left behind and you just left it there and you had another $25,000. You are absolutely able to use more than one retirement account that you have. And above and beyond that, let's say you've got a partner, a friend, a relative. You're going into the business together. Let's say your partner has a pre-tax retirement account. You and they can both be doing this. There is still only one corporation, even if there are two of you involved, and there's only one new 401k account. It is okay for your funds to go into that account and your friend, your partner, your associate. So therefore, definitely wanted to make sure that I reference that. If you've got a retirement account that is from your current job and you are not separating from service, you're not retiring, you are going to work another 2, 4, 10 years, you would not be allowed to tap into those funds. If it's a 401k or any pre-tax retirement account, you would have to have separated from service in order to gain access to that money. However, there's a couple of scenarios that I wanted to point out. If a person is over 59 and a half and they are still working and they want to keep their job, in almost every instance, they are able to roll over the funds because they are older than 59 and a half, even if they're going to stay with their job. Another scenario, you or your friend or your partner are still working. You've got a 401k, but the key is, do you have any money in that 401k account that was from a prior employer's plan? For example, you worked one place for 20 years, you had a nice 401k, you left that job, you went to your new job, and let's say you rolled over the money from your old 401k, you now have one 401k with your new employer. However, a bulk of those funds might have been from your prior employer. And then you're able to use them, the prior funds, even if you're staying and you're not yet retiring or you're not yet terminating. So that's another thing to contemplate as we're going through this. The rollover option is viable, makes sense, is feasible if the total amount that's going to be rolled over is $50,000 or more. And we'll go into some of those details afterwards. So these are key information. And absolutely after the session, we will have time for questions. I will absolutely, on the last slide, you'll see my email address, my phone number. Absolutely do not hesitate to reach out. You might have a question you didn't want to pose in front of the group. No worries. Couple of more things that make this option really exciting. No matter how old you are, no matter how much money you want to use, no matter what type of business venture you're interested in, you're able to tap into those funds without taking a taxable distribution, which is a beautiful thing. You are also, no matter how old you are, able to tap into those funds without incurring an early withdrawal penalty. Now, if you had not known about this option, we weren't on the call today, no one had mentioned this to you before, and let's say you had an IRA, easy example, you had $100,000 in it, and you got into a pinch and you absolutely positively needed money ASAP. If you called your IRA provider and you just said to them, you're in a pinch, you've got to liquidate those funds, by the end of the time that you get that check, you would have likely been missing 35 to 38% of that money. Why? You would have gotten hit with the early withdrawal penalty of 10%, and then that $100,000 would be seen as taxable income. And therefore, whether you were getting taxed at 20, 25, 28%, that would be gone. So this rollover option allows you, when you're investing in a for-profit business, to roll over the entire $100,000 without incurring a taxable distribution. It is not a withdrawal. You're investing those dollars that go into the 401k that are able to move into your company bank account, because what you're doing, and this is a key point, you're using the 401k which will be actually owning shares of stock. You are buying and issuing stock of your privately held new business. These are not shares of stock that are on the NASDAQ or the Dow Jones. Nobody else can decide they want to buy stock of your company. Only from your dollars that were rolled over into the 401k that you're then going to be able to wire to the company bank account. Your 401k will own stock of the business, and you as an individual, based on any money that you spent, will also own shares of stock. The typical timing from start to finish, and there are variables, right now because of COVID, is probably near 4 or 4.5 weeks. Depending on the state that you live in, there are differences as to how long it will take for us to get your articles of incorporation. States such as California and Florida and Pennsylvania are quite slow. It takes quite a long time. There are many states that are very quick, many states. And in truth, most states are pretty quick, but there are a handful of states that take longer for that. And then depending on, let's say you needed to separate from employment, you knew for sure you were going to leave, you would have to have had your last paycheck, and your company would have to have told your 401k provider that you separated before any money could move. So if you needed another 3 or 4 or 8 weeks to leave your job, this could not have been accomplished in 4 weeks because you didn't leave yet. When we create the new 401k plan, we are actually setting up a 401k profit sharing plan. That's going to allow you the ability to contribute. And there's 3 ways that you're able to put money back into the 401k from deferred salary. Number 1, when you take a paycheck, you're deferring a percentage of your pay. The money's going into the 401k. You might want to do company match contributions. It's completely optional. You are not required to. You might say, hey, my business was so profitable, I want to do a profit sharing contribution. That is also optional. It's elective, not required. If a person was paying themselves a good salary and they were deferring the maximum amount, and they were matching, and they were doing a profit sharing, a person that was under age 50 could literally put $58,000 in a calendar year into the new 401k, and a person over 50 could literally put in $64,500. You, of course, do not have to put in that much. It obviously depends on your cash flow and your profitability, but it is possible. Regarding this option, the key is that you realize that you have full control. Your funds are going to be liquid. You have control of your company bank account. You have control over the 401k. So that when the money got into your brand new 401k, you decide how much you're going to want to move and wire out in a lump sum. And then as your 401k grows, you're able to determine your investment options. I am not doing that. Our company is not doing that. You're in control or able to work with a financial individual for your funds. Definitely your full control. You're able to be using the money for any expenses whatsoever, and you could pay yourself as soon as you wish because you are an employee of your company. And if a person was looking at perhaps a bigger project, if they needed a loan, every loan's going to require what the bank calls non-borrowed cash injection. If a person had a project and it was $300,000 all in, the bank's not going to give a person $300,000. They need to inject some of their own money. Through the rollover option, when your money becomes liquid and it's in your bank account, you're absolutely able to show that you've got non-borrowed liquidity. Now we can certainly open it up. If any of you want to unmute your phones, as long as there's not dogs barking or kids screaming, it shouldn't be too difficult for us to be able to hear the questions.
Does anyone have any questions for Diane?
I have a question. I got on a little bit late. This is Tanisha Bowen, and my question was, I noticed when you were doing the up to age 50 on those calculations, if you were, do they have it where you can withdraw when in times that are not COVID? Does it go back to like the 59 and a half to be able to eliminate that prepayment penalty?
That's a good question. So the establishment of the new 401k, it is a full-fledged 401k profit sharing plan that must follow all of the rules and regulations that the IRS has for 401k plans, where in most scenarios, aside from some uniquenesses that we've had with COVID, those funds are not able to be withdrawn or removed. However, let's say a person's been contributing for a while, their account's growing and growing. Our 401k plan would allow you, if you wanted to set up a loan feature where the rules relating to that, again, across the board, a person can take out a loan from their 401k that is up to 50% of the balance they have in the account without exceeding $50,000. Those are the rules regarding taking out a loan from your own 401k. You are technically then paying yourself back with interest. But aside from a loan from the 401k, these funds are intended to simply be growing for your retirement that you're putting aside on a weekly or monthly or quarterly basis based on when you pay yourself as an employee.
Okay, thank you.
Certainly.
Diane, we have a couple of questions in the chat. One from Cicely Trotter. Is the 5,000K the minimum or just the recommended amount?
The 50,000
50.
The 50,000 is the amount that really makes sense because of the fees involved. And I could certainly share that with you. The fee for our company to help clients with this entire process is $4,995, just under 5,000. Therefore, a person would never roll over 25, 33, 41,000. It really would not make sense. It makes sense when a person is, with whether it's one account or multiple accounts, able to tap into and ultimately use 50 or more.
And Dana Bakari wants to know, would you share the slides?
Oh, this slide deck? Regarding the slides on this presentation? Sure.
Yeah, yes.
Yes, if any of you could email me, my email is my first name, Diane, DIANE, at tenetfinancialgroup.com. Tenet is TENET. So if any of you want this, I can absolutely send it along. I can also forward to you our rollover brochure, which goes into more details. I can share with you information regarding the ongoing administration and record keeping. Our company is also, in addition to helping everything get started, the key is that every 401k plan in the country must be properly maintained. It must have the right record keeping, administration, tax reporting. Our team at Tenet, we are rated A+ by the Better Business Bureau. Our clients' 401k plans have never been audited by the IRS. We help clients with each step of the process. We handhold you throughout, and we are there to assist with your plan and questions after it is active and ongoing. So we can certainly share with you information regarding the administration. There is a fee, and that is for the plan, whether you are the only employee, whether you have multiple employees that are participating in the plan. The fee is $120 a month, and that is a business expense. We do all of the tax reporting. We do the tax filing. If the IRS changes a law and we need to do an amendment or an addendum to the plan, we handle that. We will issue participant statements of account. We do the reconciliation within the 401k plan every month. There are tremendous details that we handle, and that is our team's expertise. Two pieces: setting everything up properly, helping you start to finish with everything, and then doing proper administration, maintenance, record keeping going forward so that everything is done following all the IRS guidelines. Good question.
We've got a couple of other questions. Can everybody hear me? I think my connection was bad the last time.
I can hear you.
Okay. When are the funds taxed in the business account?
The money that moves into the business account, those funds are not taxed. You're going to be spending them for your business purchase, your business expenses, your salary. This scenario, the most common breakdown regarding the shares of stock is that you would own 5% of the shares of stock from any money that you've spent personally. And the 401k plan, because that's where the funding, majority of it came from, will own 95% of the shares of stock. You can at any time reverse that. You can buy shares of stock from the 401k plan with money in your company bank account. And we could certainly on a one-on-one review more of those details. But you are therefore starting off owning some of the shares of stock. You can absolutely increase your ownership. And there's, of course, an exit strategy if you sell the business. But that's some of the key information right there.
Next question. Is there a minimum that must be drawn weekly or bi-weekly to pay myself?
No, that would be something you and your accountant would review to ensure that it was something that was reasonable. That probably is, for example, if a person rolled over $100,000 and they paid themselves $88,000 the first month, well, for example, that would be unreasonable. But we are not babysitting in any way at any time your corporate bank account. But the key is you definitely must have an accountant that would be doing your corporation filing, because the IRS absolutely requires a C corporation. So your accountant will do that filing. We handle the tax reporting for the 401k plan. And so you and your tax accountant would be the ones that would analyze and determine what might be reasonable as a salary. And then as you are a W-2 employee, when you do take a salary, whenever it may be, that's when you're going to defer and put something into the 401k. So the IRS will see that your 401k plan has permanency, a really important feature.
Well, next question is, if you are a real estate investor and already have an LLC, do you have to convert your business from an LLC to a C Corp?
Terrific question. Answer is yes. However, if you were doing a slightly different project or something that was not really related, you could therefore still have your LLC for business number one, we would create the new C Corp for business number 2. You're absolutely allowed to have an LLC and a C Corp, but they cannot be related at all. So some people might say, well, you know what? This is the business I need to recapitalize. I've got my LLC. It's been running for years. This is the entity I need the funds for. So instead of it being a new business, it's considered recapitalizing an existing business. And therefore, yes, your accountant would need to convert your LLC to a C Corp, because this option is only viable for a C corporation that is taxed as a C corporation. And your C corporation, just like your LLC, is a separate tax-paying entity. And so your corporation has one ID, your 401k plan has another. You personally do your own tax filing for your personal taxes. So good question.
And I'm going to ask if there are any other questions. I don't see any in the chat, but if anybody else has a question right before we leave, this has been awesome, awesome, awesome. This is a great tool that we could all add to our investment arsenal. Great tool if you've got, previous employee 401k funds just sitting. Great way to utilize those funds.
I agree. This was really good information.
Terrific, terrific. Well, everybody, thank you for your time. If any of you got on a little bit later, definitely my contact information is there. Anyone who reaches out, I can most certainly share these slides with them, as well as providing additional information. The data that I referenced was I can provide our current 2021 brochure, as well as information regarding the ongoing administration that is required for any 401k plan.
Diane, thank you so much. This was great. Everyone have a great evening.
All right, everybody, take care. Thank you.
Take care. Bye-bye.
Thank you. Thank you.